Me, I have my mic. Do you have your mic there, Dan? Like
I
the
have
the
Good
Rode
morning,
mic?
everyone. We're live here. The team is I think, a little bleary-eyed today after a
little bit.
really fun holiday party last night. So we're missing one, and the rest of us are sleepy. So Friday, December 2nd, and we're doing our live stream. So welcome, Sano, Michael.
Yeah, how are you guys doing?
Pretty good.
Yeah,
Good.
Pretty good. Yeah. It was a lively party last night. Client event that we had here at the house, and it's an annual thing. We've had that for 30 years, minus 2 COVID years. But yeah, since 1993. So it's become a bit of a tradition, and we really enjoy it because we get to see people. Sometimes we only see them once a year, our clients, and it's just a nice way to welcome the new year.
There were some people here last night that were also here in 1993. Perhaps.
Yeah, there would have been. Yeah, absolutely. There would have been.
That's good.
I mean, it reflects that our clients are. It's really like kind of a bigger extended family more than anything.
Yeah.
I know it sounds a little cliche, but it's kind of true.
Yeah, it was a lot of fun to connect with some of the buyers or sellers that we had. We've worked with years ago, but also like catch up with them from transactions from earlier this year, and just sort of like getting a sense of how the new house is that they purchased or whatever, and it's just so neat to kind of see the few of the people that I talked to, they were very, very happy, and it was just great to talk.
Yeah. I guess this was going to be our topic for the end of the chat, but why don't we dig into it now? It was when you say it's seeing some clients that we sold houses to within the last year or two. Some of them, it's actually nice to literally see their face. I mean,
yeah,
when we sold them houses when everybody had to wear masks, like this is maybe the first time you've seen them without a mask on in a year and a half. So yeah, really kind of a fun night, and and everyone, it seems to be settling. I think a lot of people that bought homes over the last couple of years are really, really happy about that decision. And I guess maybe given where the market's gone for them, they feel pretty good about it. So
yeah. So maybe that's a good way to dovetail into the market.
Here I'm going to just pop up a slide from the monthly statistics for November 2022 that were dropped yesterday. So the one thing I just want to highlight here is there's this, I don't know how to draw on the screen here. I'm not going to try. So that number in the top right corner, 1648 sales, that is down 20%, 21.8% over the same time last year. So sales have slowed pretty significantly from last year. But I think that, still the silver lining in that is that that 1648 sales for November is up 10 or 12% over the 12% over the 10-year average for the same time. So we're down from last year, but it's hard to compare to those record-setting numbers. I think we have to look at it, take a step back, and say, okay, things are still okay. The market's still moving.
Yeah. The market has been pretty bolsterous. Let's talk about some of the things that impact the market. One of the things is short-term rentals has driven the condo market, at least, and some of the single family and perhaps even the duplex market. Michael, you can speak to that as well as anyone. We just had some news that in Vancouver there were some restrictions on that. In Calgary, we have restrictions on depending on the condo building that you're in. There are restrictions in short-term rentals, and we talked about that last time as well. But the more that's a double-edged sword. I think the more restrictions we have in place, it limits the ability to rent out on, for example, an Airbnb, and because an Airbnb can bring in a higher return than other forms of maybe longer-term rental. that limits the value of these properties. So
Yeah.
there's two sides to that. Like you can have guys coming and going in down your hallway. Your neighbors, you don't get to know your neighbors, but it increases the value of your building to a degree. So I guess you have to weigh that if you're running a condo board.
Yeah, I had a good discussion with one of our clients last night who is a long-term tenant in a building that does allow Airbnbs, and his comment was that he sees a difference in how tenants treat the property. He tends to treat it like he owns it, and I think the short-term renters might treat it a little bit more like a hotel, and maybe just don't show the same care and attention in their stay. So
yeah, throw TVs out the window.
I have a counterpoint to that, Dan. So sometimes a long-term renter, I think it's hit and miss. Like some of them take very good care, and some of them have habits that can really harm the actual value of the property. Whether they're, I don't know, there's a whole bunch of things that you see, and so I think in some cases an argument can be made that superficially Airbnb might sometimes get a ding here and there, but they're not like major catastrophic problems.
yeah,
Like, I don't know. I mean, hoarding and a hoarder, like let's say a landlord has to deal with someone and they didn't check on the property very often. And all of a sudden 6 months later, you have a situation where there's, just stuff everywhere, or there's food everywhere. And it just like, it just brings in problems. So I don't think it's completely black and white with respect to kind of the wear and tear.
For sure. Yeah. I think that this comes down to something that, we always get asked these questions that people want black and white answers to, right? Is it better to do this, better to do that?
Yeah.
And, in real estate, buying and selling, renting, I think what we have to remind ourselves in a lot of cases is we are dealing with people.
Yeah.
And there is no black and white when it comes to people and their habits and their tendencies and their,
and we've had both long-term and short-term rentals, and I would say that we've had good experience with short-term rentals. They've been very respectful of the property, maybe more so, or as at least equal to, or more so than the long-term rentals. So I think it comes down to management, and unless I think you could do well unless you start, renting to rock bands that throw TVs out the window, or if they're we actually had the case where we think they might have been making some kind of an illicit movie in the unit. So you have to be careful of that. You have to screen. You have to know how to screen.
Yeah.
And that's a skill that in fact, we farm that out because, not that we don't have that skill set, but we don't have the time to do that.
Yeah.
So, yeah. Anyway.
Well, that's a good point. Again, had a good conversation with a client last night. We haven't seen in years. They bought a rental property about 7 years ago, and they said they've had good and bad. They reinforced that checking references and just doing all that due diligence up front before they all sign on the dotted line is time well spent. So
yeah,
absolutely, I agree.
Yeah. So you mentioned the Vancouver bylaw, and specifically what happened in Vancouver.
Yeah, so Vancouver introduced a bylaw where you're not, and I don't understand it in depth, but from what I've read, you are no longer allowed to discriminate. So, for example, you can have buildings that limit occupancy to over 55. That still exists, but you cannot have a property that limits occupancy to under 55, like, for example, or that limits pets. So you cannot discriminate against pet owners or things like that. So they just brought in a bylaw that reduces discrimination. I guess that was the intention of it, to rentals, to open up the rental market perhaps a bit more.
Yeah, in a tight housing market, maybe that's some regulation might be required to ensure that there isn't undue pressures on tenants. I think that in Canada, we probably have more of a regime that's favorable to tenants versus landlords. I don't know if it's quite the same in the U.S., which, if you were to compare Canada and the U.S., generally speaking, the U.S. is more capitalistic and Canada is maybe a little more socialistic, where, take care of the people, and in the US, they take care of the capital or the people with the money. Anyways, that's
Yeah, and Vancouver also has, or at least British Columbia has rent controls, which is an interesting aspect of their market. Which we
it
don't
is. Yeah, it's funny. You know, we always in Alberta, I always hear tenants cry for rent controls, and without the understanding of the long-term implications, which are have been studied, and categorically, they're not good for the tenant, except for the first year or two.
Yeah.
So explain that, Daniel. Why is that?
Well, because when you bring in rent controls in a market that's rising, you know, the idea is that you want to control the cost of housing, but what you're doing in the long term is you're limiting the availability of housing, because if landlords can no longer build, and I'll touch on a quick anecdote, another one from last night. If landlords can no longer build and be profitable in a rental market, they're not going to do that. And so if you have 1,000 units available today and you're going to limit the rent to, let's just call it $1,000 with a nominal increase every 5 years or whatever the rent control says, then as land prices and everything else increases, builders are simply not going to build rentals.
Yeah.
Because they're going to be limited in their returns. So it's a short-term gain for the tenants and for the tenants today, and a long-term disadvantage for every tenant in the future. So it's an interesting dilemma that you know, and everyone's going to pick their side depending on, you know, if they're a tenant or a landlord or whatever. But I think they've seen that in both Vancouver, and I think Toronto has similar rent controls.
I think Toronto has some really tight ones. Go ahead, Sano.
Yeah, I'm not certain. That's a good question. I'm not sure that they do or not, but yeah, maybe we can touch on, you know, what's happening in you know, the cap rates in that in market, so the multifamily market and so on. And
multifamily market cap rates are still tight. I think where we've seen the cap rates rise is in office. We were looking at a study a couple of days ago that said office rates are like 7% plus for cap rates. Multifamily is still between 5 on the high end, 6.25, I think. And so they're still looking like fairly good investments, generally speaking, despite the rising cost of borrowing. And on the office side, the interesting thing that I saw was that the double and triple A, or I guess anything in the A class for office, had a worse cap rate than anything in a B or C, which you know, on the surface is probably hard to
worse. You mean a higher or a low? Sorry, you should just describe that.
Yeah, so, a higher cap rate. So people are paying less per square foot, for example, for A class or whatever, than they would for B.
Yeah.
Or less. I shouldn't say less per square foot, less per dollar of income for that nice buildings than they are for the lower class buildings. So, you know, there's a few theories you could probably formulate, but I'm not sure what that reason is.
So the demand then for the really class A, triple A space is not as high. Therefore, the returns aren't there. There's higher vacancy. So if you're going to get into office, you want to get into maybe suburban office or something, you know, class B or C. And if you're the other markets that seem to be faring well are the industrial market continues to fare well. And that's noted by, I mean, we have some connection to some of the clients of ours in Surrey that are building and building like gangbusters. In fact, I think they were the #1 fastest growing company in Canada last year with a growth rate of something like 14,000%. It was a ridiculous number. And they're doing that by building, first of all, developing the land and then building out industrial and then leasing it and then selling that to REITs and so on. So they're making it on three levels, I guess. They're making profit on 3 levels and then trading it out. So it's an interesting market. So industrial and retail is also doing holding its own. There were a couple of appraisers here last night that we asked that question to, and they confirmed that retail, industrial are still pretty strong.
Yeah.
So when you mention industrial like that, would that be probably a mix of like heavy industrial, but also like kind of mixed use, like shipping distribution type
Yeah,
warehouses and things like this.
absolutely. And I guess you could, it might seem like an obvious trend with everything that's going on with COVID.
Yeah.
People shopping on Amazon, and that when you think about it that in retrospect, it seems obvious, but
Yeah. I mean, we had a client here who just last night again at the party who just closed on a light industrial property. I think light industrial is really tough to track down right now if you want to buy.
hard to find. Yeah.
It's hard to find. Yeah. Anything with a storage yard, big overhead bays or doors in a bay. It's not easy to find if you don't want to be, very suburban. There's a lot of developments in Calgary around the airport that are coming up. Nice little properties, but I think there's a specific business that works really well there that might not work as well if you're in one, the Highfields or the Manchesters or the Green Views of Calgary. But there are many businesses that are dying for something light industrial in those areas. So, yeah.
So the other trend that I see, or that we can forecast, is that Vancouver and Toronto get the bulk of, I wouldn't say the bulk, but they get a good number of their buyers from overseas, particularly Asia. And it kind of fell under the radar. Not many people were talking about it until maybe just the last week, is that there was the federal government came out with a foreign buyer ban for the next 2 years. And that ban, from what I understand, is bans foreign buyers from residential property, not commercial properties, but bans foreign buyers of purchasing residential property in Canada for the next 2 years. And the consequences of that are that, I think the understanding is that there's a penalty of somewhere around $10,000 if you purchase it. So the thought is that perhaps it wouldn't have much of an impact on the upper end market. If you're buying a $2 million house, $10,000 might be worth paying, along with all the other taxes that the BC government and others have imposed. They have some. I'm not familiar with all of them, but they have some pretty hefty taxes for foreign buyers.
Yeah.
But on lower price properties like student housing, it might have an impact. And many of the Asian buyers in particular buy housing for their children, for student housing, just to kind of get them in the market. Seems to be a large segment of that purchasing population. So, what are your thoughts on that?
Well, my understanding of this, there is a $10,000 fine for any foreign entity that purchases property after January 1st. But I think there's also some powers in the act to force that property to be resold. I'm not sure what the mechanism is. I'm not sure what the timeline is. You can imagine if they drag it out through the courts, it could be beyond 2 years, at which point the ban is potentially off and everything's just fine. So, I think that we will see some drawdown. I don't know if we're going to see any further drawdown in Calgary. As we talked about earlier, the markets have slowed a little bit.
Yeah.
We're still seeing a fair number of the out of town buyers being Canadians from other parts of Canada, and maybe just not as many from out of country right now, which you would expect them to try and rush in and close on something in December. Maybe we'll still see those coming through, but I don't know that I've seen a ton of international buyers in the last couple of months.
Yeah, I think our immigration is mostly interprovincial, so it shouldn't affect the Calgary market as much as it may affect Vancouver and Toronto.
Yeah. And speaking of in-migration, I heard just a report on the radio real quick that Alberta for the last quarter was positive 10,000 in migration. So kind of a nice trend to see turning around after oil and gas kind of tanked and people started leaving in droves.
Yeah.
That's pretty good. I mean, I recall in sort of the boom years of 2007, 2008, kind of, the numbers were somewhere in the 30,000, 35,000 range per year. So when you're getting 10,000 per quarter, that could correlate to something like we had back in 2007, 2008. And generally that is the mood out there, is that Alberta is the place to be. So
Yeah. For people moving as well as for investment.
The high tech sector here is doing very promising. A lot of people moving here for that.
Yeah.
So the other thing, I guess, that we have, I'm stuck with this morning is it's right beside you, Daniel. There are boxes and boxes and boxes full of food.
Yeah, let's see if I can turn the camera here just to show.
From our
things attached to my computer. Anyway, there they are.
Yeah. So from our friends and clients who attended our gathering last night brought a plethora of food for the food bank. So we've got maybe a truckload or two to take to the food bank.
Yeah.
Today.
Yeah, really, great to see our clients willing to give back.
Yeah. Yeah, and I understand that, like, the food bank use right now is at record levels. So it's a really good cause, to be honest.
Yeah. I did hear a couple of weeks ago that the highest increase in food bank users is just single people at the moment. Single individuals, not families, which is, I'm not sure what to read into that, but it's good to give to the food bank. Hate to see that they need it, I guess.
Yeah, right on. Well, with all of that, I'd like to just kind of wish everyone, top of the season, happy holidays, all that. I think we'll have one more probably before the holidays are upon us, but everyone enjoy the parties leading up to Christmas and all the festivities. And we are working until the bitter end, so don't hesitate to call. We're not on holidays, but we're around and looking forward to the holidays. Put it that way.
Yeah. And if you guys ever want to harass us pick our brains for any of the topics that we've talked about today or other days, don't hesitate to bug us.
Yeah, absolutely.
Yeah. Well, thanks for checking in, everyone, and see you in a couple of weeks.
All right. See you guys.
See ya. Bye-bye.